Two significant events impacted our financial performance this year: oil prices and the strong US dollar. The drop in oil prices was a welcome relief on costs. Our net savings from the drop in oil prices was 9 billion dirhams. However, low fuel price is not all good news, because it contributes to poor business and consumer confidence, and it adds downward pressure on airfares, impacting demand and yield. The strong US dollar against currencies in most of our key markets had a 6 billion dirham impact on airline revenue and a 4.2 billion dirham impact on the airline's bottom line. Despite these challenges, Emirates and Donata continued to grow and deliver solid results. Accelerating is the theme for this year's report, because our strategic investments have fueled our future growth to leave us in a strong position at the end of this year. This year, the Emirates Group achieved its 28th year of profits. In fact, we recorded our highest profit ever at 8.2 billion dirhams. This is 50% more than the previous year and speaks to our solid business model and strategies. Group revenues dropped 3% to 92.9 billion dirhams, compared to our record revenue performance in the previous year. This was mainly due to the unfavourable currency exchange situation. Our cash flow from operating activities is up 8% to 15.5 billion dirhams. This is the highest amount we've ever achieved. It shows the strength of our business and our ability to fund new investments in the future. Our cash balance of 23.5 billion dirhams is 17% more than the previous year. This puts us in a good position to invest in our future business growth. We'll use about 4 billion dirhams of this to repay 2 bonds which are maturing in June. Based on our financial performance this year, the Emirates Group will issue a dividend of 2.5 billion dirhams to our owners, the Investment Corporation of Dubai. Over the last decade, we'll have delivered more than 10 billion dirhams in dividends to our owners. To meet the needs of our expanding operations across both Emirates and Donata, 11,000 new employees joined us last year, bringing our total workforce to 95,000 at the end of March 2016. Last year we invested more than 17 billion dirhams across the group to build our business. This follows record levels of investment in the previous 2 years. Emirates and Donata compete on a global stage, and we know that we cannot be complacent. That's why we invest in modern aircraft and facilities, and why we invest to enhance our capability, improve our products, and develop our people. Now, let's take a look at Emirates' performance. Over the year, Emirates has seen revenue decrease by 4% to 85 billion dirhams. This drop was largely due to the strong US dollar. Operating costs decreased at a faster rate than revenue. Lower fuel prices helped to bring Emirates' fuel bill down by 31%. However, fuel remained the biggest expense for the airline. Our profit increased to a new record of 7.1 billion dirhams, despite a tough market and stiff competition. Our investments in product, service, and our people continue to pay off in earning customer preference and loyalty. Our profit margin was 8.4%. This is a 3.3 percentage point improvement over the previous year. Every year, we add capacity that is equal to the entire fleet of some of the world's airlines. We received a record 29 new aircraft over the last year. At the same time, we retired 9 older aircraft. This kept our average fleet age at a youthful 74 months. Overall, our fleet capacity increased by 11%. This is the second largest capacity increase in the airline's history in one financial year. Last year we flew 51.9 million people, crossing the 50 million mark for the first time. Seat load factor was down 3.1 points from the previous year. This decline is partly due to the 13% increase in seat capacity and a record year of aircraft deliveries. It is also partly due to challenging market conditions. The freight market was still sluggish last year. Recovery has been slow in many markets across the globe. However, Emirates Sky Cargo put in a satisfying performance. Revenues dropped 9% to 11.1 billion dirhams, but this was largely due to the strong US dollar. We carried 2.5 million tonnes of cargo, an increase of 6%, and Sky Cargo contributed 14% to the airline's revenue, similar to the previous year. We received our new Boeing 777 freighter, taking our freighter fleet to 15. Our hotels recorded a 1% increase in revenue to 700 million dirhams. This was a positive development, considering that the hospitality industry has been under pressure, with supply generally outperforming demand. Our JW Marriott Marquis property, the tallest hotel in the world, performed well to contribute 454 million dirhams to revenue. And now, let's take a look at Donata's performance. This was the most successful year in Donata's 57-year history. This year, 64% of Donata's revenue came from its business outside of the UAE. This shows Donata's growth as a global air services provider. Revenue increased by 16% to reach 10.6 billion dirhams for the first time. We achieved this through organic growth, boosted by the first full-year integration of Stella Group, a business which Donata Travel acquired in the previous financial year, and due to airport operations in Australia, which Donata fully acquired in March 2015 from joint venture partner Toll. Operating costs increased by 17%, due almost entirely to the initial costs of our newly integrated airport and travel companies. This year, Donata recorded its highest ever profit of 1.1 billion dirhams, and Donata's cash balance grew 10% to 3.5 billion dirhams. Revenue from Donata's UAE airport operations increased by 13% to reach 2.9 billion dirhams. In line with revenue growth, the number of aircraft Donata handled increased by 12%. This offset the smaller drop in cargo handling, which was down by 6%. Donata's international airport operations division saw strong revenue growth of 32%. This was due to increasing business volumes on new acquisitions in the Netherlands and Brazil, as well as the first full-year integration of Donata Australia. The number of aircraft handled increased significantly, and cargo also saw a substantial growth. Revenue from Donata Travel Services saw a strong increase to reach 3.3 billion dirhams. The total transaction value of the sale of travel services increased to 11.7 billion dirhams. This strong performance is mainly due to business growth in the UK through the full-year integration impact of Stella Group, the integration of the group's destination and leisure management activities in Dubai, and travel distribution unit MQuest. Revenue from our catering division dropped 7%, reflecting the impact of the strong US dollar. We served over 57 million meals during the year, a slight drop of 1% due to lower volumes in Italy. The year ahead looks good for our operating costs, but bad for global business and consumer confidence. The strong US dollar against major currencies will continue to be a challenge. Our industry has always been competitive, putting pressure on our yields, and protectionist rhetoric from some of our competitors continue to threaten the progress of our industry. We must stay ahead of the competition. That's why we're investing so much of our profits back into the business. For Emirates, starting the new financial year, we're looking forward to launching new destinations. We expect another record year for deliveries, allowing us to add services to our existing routes, at the same time as phasing out 26 aircraft. At Donata, we expect to fully integrate our new acquisitions. These ventures extend Donata's operations to 6 continents for the first time. We also expect to open our new catering facility in Cairns, Australia this summer, and to continue driving synergies from the integration of our various travel businesses. We move into the new financial year with confidence. We'll work even harder to meet and exceed our customers' expectations. When the group progresses, so do our people. So do the thousands of communities connected to our business. So does Dubai. We have a strong foundation for continued profitability, and we will keep investing in our people, technology, products, and facilities. We will keep accelerating.